What's up, YouTube? I'm Matt. This is That Matt Money. Today we're talking about June market moves part 2. So in this series, you're going to see all of my moves. I'm going to show you if I'm actually making money or losing money. I'm going to be straight up with you guys because I like to try and be that way. And I'm going to tell you everything I'm doing. So I woke up 8:30 this morning, had a cup of Joe, and I bought my 3 dividend stocks that I'd made a video on earlier. So those 3 stocks were AT&T, Walmart, and CVS. I like those 3 because they're all Rona proof. I enjoy that if another wave happens, which it sounds like it might, then I'll be safe from those. So, and I bought super lightly, I only bought a couple shares. So I didn't buy a lot, and I'll show you that in a minute here. So those are my market moves for buying stocks this morning. And then we're gonna go ahead and show you what my options moves are gonna be and where I want prices for certain stocks for me to possibly start buying back into those stocks. So we'll hop into that here right now. All right, so let's go ahead and look into my option work here for a second. And if you are new to the stock market, don't mess around with options, you'll get burned. So this is just what I'm doing, how I like making money, and I'll show you. So for me, I am a boy who is theta gang for life. I love theta decay over time. I like that you can sell contracts and make money on the shares you already have and kind of leverage your shares. So I'm a theta gang person. I sell contracts to the Wall Street bet guys that are going to make it big, and then I take their money. So that's what I do to make a little bit of money, which I like doing, and I've made quite a bit off of. And I've only done it for a little while here. So let me tell you what I'm wanting to do here with my option plays here. So on last Friday, I had a $9 cash covered call on US Steel, and US Steel is now like $7.80, so it was out of the money. So I was selling them a contract saying, I'll give you my 100 shares for $9 on this date. And now that it was out of the money, that contract was worthless. So I made all of the money off of that contract that I got in premium. So that was worthless. So now I have these 100 shares of US Steel that I have, and I want to leverage them again. So my plan to leverage them is I want to do a cash covered call. And I'm always really happy with my cash covered call if I can make 1% on my money. So 100 shares, let's say, is $750 worth of capital. So if I can make over $8 in 1 week, leveraging my cash covered calls in an option I don't think is going to be in the money, then I could totally see that and do that. So for me, I would want to sell probably a cash covered call at around $8.50 or $9. And I want at least that 1% return on my cash covered calls. So what I'm saying here is I will give you my 100 shares of United States Steel for $8.50 this Friday. So that is what I would be saying. And if it is below that $8.50, I'm going to keep all that premium and your contract is going to expire worthless. So that's the hope. I don't mind if they take those shares because I'll be in the green on that. If they take the shares at $8.50, anywhere above that, I will lose all those gains. But I'm okay with losing the stock at $8.50 or $9. And quite frankly, I think it's going to go down for a while. I think the whole market's going to go down for a while. So I think that's kind of a nice hedge against bearishness of the market. So the other thing I'm thinking about doing, but I'm not as sure, I am for sure going to do this. I'm not sure if I'm going to do this. So X, sell a cash covered put. So that's the opposite side of the coin on this. So this is saying I will buy United States Steel at X amount of dollars and I will buy 100 shares of this. So if I say I want to buy a $7 cash covered put, if it gets to $7 or below, I have to buy 100 shares of US Steel for $7. If it even goes to $5, I have to buy 100 shares at $7 on that expiration date. So there's a risk there because you could lose out on money and then your position is going to be a little bit shorter. But if you are bullish on the stock, then it's okay with it. And I'm bullish on US Steel. I'd hold it for a long time. I like that company myself. So I would think about doing that. I'd want the at least 1% return on my $700 because it's in terms of 100. So I would want at least a 1% return on that right there. So these are possibly my plays. And if I were to have a $7 cash covered put and a $9 cash covered call, if on Friday it expires anywhere between that $7 and $9, I keep all that premium. I don't have to give away my shares and I don't have to buy any new shares. So it is a really cool play on shares you already have and leveraging shares you already have if you have 100 of those shares. So I think it's really cool that you can do that. And upside, even if US Steel were to go to like 25, I would just lose those shares for $9. So upside protection is there too, because if you just buy a naked call, then you're just gonna, or if you sell a naked call, you're gonna be on the hook for all that money, which is really scary. So that's what I'm gonna do with US Steel and my option plays that I have right now. Nikola, if you guys watch my other video, I had a cash covered put on Nikola. and it was a $30 cash covered put that expired this Friday. I got $35 worth of premium for that cash covered put. I sold that today during market open for $25. I had made 25 of those $35 within one day. So sometimes you just got to take the money and you got to run, boy, run. So I was happy. So $25, that freed up $3,000 of my capital that I have for whatever I want to do with. So that was really, really nice. So I'm pretty happy with that right now. So those are my option plays that I'm going to be doing this week and how I intend to make money. If you don't know what the wheel is, and if you don't know what cash covered calls are and cash secured puts, I'd recommend looking into it because I really had a new light on options afterwards. I was so defeated by them before, and now I'm actually making money on them. And if you want a video about that, leave that in the comments. So that is my option activity. Okay, so let's go over some stocks I'm always keeping a watchful eye on. So I love to death the FAANG stocks. I kind of hate the valuations, but I love the business model of every single one of these stocks. Love them. So what is FAANG? Facebook, Apple, Amazon, Netflix, Google, Bear. So that's what we have right there. So I'm going to share with the current price, my interest price, and the load the boat price. So here are my prices right here. So currently, Facebook, 240, which honestly, of the FAANG stocks right now, 240 is one I would possibly start buying into if I wasn't bearish on the market. I think Facebook's easy money, and 240 I actually like right there. Start my position. I want it to get down to 220 before I start my position. Load the boat stuff, under 200. I'm really bummed in March. I never bought any of this stock. I had to keep costing down Carnival because I was getting roasted on Carnival. But Facebook was one I was like, oh, I should buy. It's like I think it was 160 or so, and I never did it. So sub 200 this time, I'm capitalizing, I'm loading the boat. So Facebook, like that one. Apple is pretty stinking expensive right now, $355. I remember seeing it December of 2018, I believe. It was $150. And I thought to myself, wow, I should like take out an extra mortgage on the house and load up on this. But I didn't because, I don't do smart things. So it's $355 right now. My interest is $300. My load the boat price point would be $250. So that's kind of where I'm at with that one. I love Apple. I think it's going to do great over time. And, iPhones aren't going away anytime soon. I'm recording on an iPhone, so hello, iPhone. So, yeah, I don't think it's going anywhere. Amazon. So, Amazon stock is $2,700, and Amazon has just won. I just can't get behind the valuation of it, which sucks because I've been watching it since it was like $1,500. So, but I just can't get behind the valuation. I just don't think I'm ever going to be a buyer of it because I can't get behind the valuation. So I don't really have any interest in it. If it got below 1,800, I don't know, maybe half a share I'd buy to have a little exposure because it grows like crazy. And that's the case with all of these. The valuations are crazy on all of these. So it is hard to buy a stock for me where I'm not seeing the value. Like the price to earnings is always super high for all of these, just ridiculous. So I'm not really interested in Amazon. Netflix, I love Netflix right now just because their numbers are up really high from the Rona and everything like that. So 460 I think is way too high though. 350 is where I'm showing some interest. 300 is going to be load the boat territory. And the last one is Google, and I absolutely love Google. If I could get two of these, Google would be first. I think Apple would be second, and then Facebook would be third. Debatable for that second one there. But I love Google. 1,400, I think they have tons of growth. I mean, the first thing you're ever going to do ever for anything is, I'm going to go in Google and Google it. I do that probably, at least 10, 15 times a day. So I love Google. I actually am okay with the price at $1,440. I think it's a little overvalued. I'm showing quite a bit of interest at $1,200. And if it got sub 1,000, we are going to be loading the boat. Take out that extra mortgage. No, don't do that. That's just a joke. So, but sub 1,000, I like it there. So those are the ones I'm watching. So let's get into a couple risky ones I was watching last week and maybe why I've lost a little interest on those ones. So let's get into those. All right, and then stocks that are getting crazy due to the coronavirus right now. So cruise lines. I was a buyer of CCL. I sold out at $22. I got the F out because I was finally green on it. I was buying it in the 40s. I'd costed down and costed down and costed down. It was way more of my portfolio than I wanted. So I finally got out at 22. I was green. My average was, I think, $20.50 or something like that. So it felt like I lost 1,000 pounds off my back. It was great. So that freed up some capital. I'm scared about the business model, so costing down and having that much was terrifying to me. And it's actually down to about $17 day of recording right now. So would I want to buy in and what price would I think about buying back in. So Carnival has so much risk associated with it right now, and if they keep staving back the cruises and if they don't start up this year, I am actually very worried about bankruptcy. So for Carnival Cruise Line or Norwegian or any cruise line, I like Carnival the most just because they have the most cash to make it through it. I would show a little bit of interest at 15, and I would maybe start buying in at maybe 10 if it got back that low again. But really, this stock, Carnival Cruise Line, has stressed me out for like 6 months. I thought it was a great play when it was in the 40s, which it was a good play at the time, and then a once in a lifetime event hits and it totally ruined it. So that kind of sucks. And another one that I liked was gambling stocks last week. I was talking about those. So gambling stocks. So I really like Wynn, and I normally really like Wynn under $100, but they haven't had any type of income coming in. So I don't like them right now. I don't like them even close to $100. I like them more at about, I don't know, $70 I'd probably buy in at. I like Wynn, but again, if there's another big wave, they're going to get absolutely decimated. So I'm not buying these until I know there's not going to be another big wave, and I know that their income is going to come back. So, I don't think a lot of people are going to go out and gamble. I don't think a lot of people are going to go out and go on cruise lines right away either. So those are the ones I'm watching that could potentially have big hits, but I'm just not so sure about those right now. The other one I'm watching are the good old girls airline stocks. And I also like the Jets ETF, because that's exposure to a lot of them, but American Airlines is the main thing in the Jets ETF. Always look up what makes up an ETF, because if the top guy is a stock you don't like, well, then don't buy it. So I like airline stocks. Delta, if Delta gets sub 25, the US government will help them out, and I will start buying in at 25. I like Delta. I like that airline stock. I think it's the best one that has a chance, and I think it's the one that's going to make it through it, if anything else. I'm worried about American Airlines and Spirit. I feel like they have a high chance of going bankrupt if they keep having such a high cash burn. American Airlines had a huge pop one day, though, because they said they will make it through it. The cash burn is going to stop. We've hit the bottom. So they released that news one day, and it was up like 20-30% or something like that. So the Jets ETF is good exposure to all the airlines, and if that gets down to, my golden ticket number is $15. It was down to 12 during March, during the peak of all this Rona stuff. Rona 12, that's where she was at. And then if Delta gets sub 25, I'm going to buy into that as well. So these are the plays I'm making and what I'm watching. If I make any moves, I always post it onto Instagram, so you guys can follow me on there if you want. So those are the plays that I'm going to be making. So those are the things I'm looking at this week. Thank you for watching. Like and sub if you enjoy the content. Throw a thumbs down if you hated it. And then just throw in the comments, what are you buying? What are you looking at? Is there a video I should make on something? And anything like that. So thanks for watching. You guys have a good one.